Hi guys, and welcome to another episode of the weekly alts analysis. So with the bear market in full swing, sentiment low and calls for a 20k or lower BTC, I thought what we do on the weekly alts analysis is carry on focusing on BTC and one altcoin per week, still focusing on the USDT and BTC pair side of things. However, rather than focusing on the short term, we would focus on the bigger picture and long-term targets for price to potentially come down and hit. Show you how to easily identify some key levels on the higher time frames, monthly and weekly, and how we can use that to find some dollar cost average entries and or some long-term swing trades as well. So we'll get straight into it, starting with BTC. So monthly time frame, as you can see, still trying to hold that level of 29.3k that we formed back in the summer last year. No monthly close below it just yet, obviously, and technically still no monthly close below the 34.4k level either, which is also a monthly level. However, it's looking pretty unlikely that we're going to hold that. 29.3k though, still holding pretty strong. Big problem if we do lose that though, if we get a monthly close below this level and it's not a deviation, and this level then flips to resistance, we're in a bit of trouble, because in my personal opinion there's not another monthly level until 13k. So as you can see, price moved pretty quick in this area on the way up. So what usually happens is the exact same thing on the way down. No levels of support really formed. Similar story on the weekly time frame as well. The only level I can really see is this little block here around 19k, which is obviously the previous all-time high as well, or just below, obviously at 20k. So maybe that's the bottom. Who knows? We might not even get there. Nothing's guaranteed. However, it's looking pretty likely that we are going to go lower. Personally, I wouldn't be surprised to see a short rally, possibly to 34 or maybe even as high as 37.5k. As you can see, we've had two nice weekly wicks bouncing off this 29.3k, so we'll have to see what happens, and plenty of weekly wicks back not only in the summer last year but also in January as well. So we're on a pretty strong support at the moment, but should it give way, then things are going to go south pretty quickly. So speaking of bear markets, the strategy you ideally want to employ, of course not financial advice, you really want to be looking at dollar cost averaging in, taking profits on the sharp rallies, and don't make the mistake of trying to nail the bottom. Don't try and go big on the bottom, because either A, it will reverse before it gets there, so you won't have any entry, or B, you'll go really heavy and then it will drop another 50% and you'll lose a lot of capital. So as I say, dollar cost average into the position, and then once the tide turns and the momentum shifts and you start making higher highs and higher lows, that's when you can start adding capital, because you're buying into strength. So what we're going to do, guys, start on the monthly. I'm going to show you how to identify a simple way of identifying some key levels that, as I say, you can dollar cost average into and or use as long-term swing entries. So we're on AVAX, pretty popular, and I'm sure it will do well in the next bull market, although as I say, nothing is guaranteed. But what you want to do is get yourself a box, a rectangle here, and what you're going to do is you're going to look for areas where price has stopped and turned around, is the best way of describing it. So first one that sticks out is this bit of price action here, where you've got two body closes and a few wicks. So what we're going to do, just going to draw a rectangle in there, and what I like to do is I like to color code mine. So for me, white is my monthly time frame color, so I will do that. And yeah, that looks pretty good just there. We'll probably tidy it up on the weekly time frame. We've got another one, you can just copy paste. We've got another one just below here where you can see those two body closures and wicks, and then another one right at the bottom of the range where you can see those candles just there. Lovely stuff. So they look quite small, these boxes, on the monthly time frame. However, when we get down into the lower time frames, you see they're quite big. The higher time frame you go, the smaller the box you want to be, ideally. So let's knock it down to the weekly and have a look, see how things are looking. Just tidy it up a little bit. My OCD. There we go. So yeah, get that box just covering those candles there. Happy days. So as you can see, when we look across, I just got to tidy this up. My OCD won't let me leave it. There we go. So as we look across, you can see I'm covering a lot of areas where price has been wicked into, body closes, etc. On the weekly time frame, any areas I would add, immediately my eye goes to this area here, where you got these candle closures, and you got a few wicks as well. So we'll start there and drag it across, and it's actually right where price is right now, actually, just there. So as you can see, guys, normally on my B2C chart I use lines, same with when I do trading. However, when it comes to dollar cost average in and laddering orders in, you just want little zones, because as I said at the beginning, you're not trying to time the bottom on bear market entries. You're just trying to get as much as you can for as cheap as you can, because even if you do have some orders down here and they hit, it doesn't matter whether you've put your whole lot in or how big you went. If you just get a small order in there, that's great, because that's going to bring your entire average entry down, and then you can start adding real size when you start retaking these levels and flipping them from resistance to support. But then a final weekly level for me would just be this level just here. You can see these candle bodies just there, and the wicks previous. So just line that up, drag it across, and again you want to try and keep these boxes nice and small on the higher time frames, and I think that will do it just there. Happy days. So as you can see, some nice clear levels where price has been stopped and turned around before. Loads of room for dollar cost average entry and ladder entries there. And as I say, what you can do is, as you pick up some orders in these boxes and they come up and test the boxes just above as resistance, you can take some profits, and then once they're flipped as support, that's when you can start adding more capital, because you're in an uptrend. You're making higher highs and higher lows, as opposed to what we're now making, which is lower highs and lower lows. The other danger you've got in the bear market, and why we say don't go all in trying to pick a bottom. Not trying to insult anyone's intelligence, however, sometimes it's good to have a little visual aid. If we go from the all-time high at $150, say, or $146, a 50% drop would have been about $72. So that's quite a buffer for a 50% loss. However, where we are now, at give or take $30, it's only a $15 drop to lose 50%. So as you can see, the lower we go, the bigger the percentage swings are. And not only that, but you got to remember, if you lose 50% on your investment, you need a 100% move to make it back. So just a little food for thought there. Don't go too crazy on these dollar cost average entries, because if you pick some up here and then pick some up here and pick some up here, if you've gone too heavy, you're going to have a big loss, as I say, from this level down to some of these monthlies down here. You can look at like 84% if you pick up some of this weekly box, and we end up down in this monthly box, which isn't too much of a problem if you don't go too heavy. However, trying to pick the bottom never works out too well. So that's my levels for AVAX USDT. And what I'll also do, and you can do this as well, I like to label it. So I'm going to label that as a monthly. It's going to be white top right, as you can see, and save that. And what I'm going to do is I'm going to save that as a template monthly. So a little mini tutorial for you guys, and then also do the same for the weeklies. Weekly top right, text, style, coordinates, visibility. And what I'm also going to do, and In fact, I'll show you that in a second. Just save this as a weekly. Done, happy days. If we now flip back to the monthly, so that can look a little bit untidy with the weekly levels in there as well. So what we can do is we can click on the weeklies, we go visibility, turn it off for the monthlies, and then save as weekly again, just with the 2 E's. Happy days, yes, done. And then we can just change that as well. Template, weekly, done. So now just the monthlies are on the monthly time frame, and we get both the weekly and the monthly on that time frame. Happy days. Right, AVAX BTC then. Again, starting off on the monthly. So straight away, price is pretty much at a monthly level, as we can see. So we've got these 2 candle bodies here and this wick here. So again, grab the box, line it up with the bottom of that candle here, and drag it across. Again, I'm going to go for the top of that wick there, that first red candle, top of that wick there. We're going to make that a monthly. Happy days. Next one, I'll go for where these 2 candle body closures are here. Grab a box, start just there. I'm going to start at the top of that wick down to the candle body just there. Happy days. And then last one will be just where these 2 candle bodies have closed here. So again, just drag it across into there. Happy days. Yeah, I'm pretty happy with that. So let's go down to the weekly. Oh, in fact, I'm just going to template these monthly and monthly. Go down to the weekly, see if we need to make any adjustments. No, I'm pretty happy with that. What we can do, you can see this wick and these 2 candle bottoms as well. So what I might do, we're going to add one just at the bottom here, and I'm just going to go at the top of that red candle wick, just the top of this weekly candle here at 28th of December, and go to that bottom of that wick just there. Weekly, done. Just drag that up slightly. Happy days. Any other weekly levels? I think here, just where you see, so just the bottom of these wicks to the top of these candle closures, and there's a couple of wicks there, so that looks like a really good area. So we'll start, as I say, on that wick just there, across to the candle bodies. I reckon just there, that'll do. Tag that as a weekly, and there you go. Happy days. And that's how simple it can be, guys. So as I say, don't go too heavy. Dollar cost average with a very, very small amount, and then start adding. You can start adding more size as we start going into an uptrend. The other thing you can do as well, guys, is if you put some dollar cost average entry orders in here, for example, this monthly box, if we get a monthly close below this box, cut your ties and then try and sort of rebuy lower is another strategy. But of course, it is all down to you. It's all down to your personal circumstances, how you like to trade, how much time you got on the charts, how much capital you got to deploy, etc., etc. So hopefully you found this useful. A quick guide on how to identify some quick higher time frame levels on the monthly and weekly time frame. What we're going to be doing is we're going to, as I say, do a different altcoin each week, and we'll probably come back and revisit these charts as well. I'm going to leave them as they are, come back and revisit them in a few weeks or maybe a couple of months time and see how it all panned out. But I hope you enjoyed the video, guys. Oh, what happened to that box? I don't know, I'll sort it out later. But yeah, hope you enjoyed the video, guys. Any questions, drop them in the comments below. Have a good weekend, and I will catch you next week.